Hey guys, TommyBryson here, and today I'm going to answer a question I get a lot. And it's basically, Tommy, what if I'm investing into the stock market and then it crashes? What do I do when that actually happens? Especially now with the whole presidential election. Hey, what happens if it crashes? Do I go ahead? Do I buy more? Do I sell my investments? Do I hold on? What exactly am I supposed to do? And by the way, guys, we've had so far over 44 presidents in America and around over 50 elections. And it happens all the time. And usually, when an election happens, the stock market reacts either positively or negatively dependent on who wins. But the point is, that's not supposed to determine what you do with your money and how you actually go about investing. And that's why for this video, I'm going to tell you 3 things every single investor has to do before the market actually crashes and how you handle it when the market actually goes ahead and crashes. And by the way, it's bound to happen if you're investing for the long run. So it's best you know exactly what to do when that time actually comes. And by the way, guys, if you guys are new here, I post videos every single day on YouTube, so make sure to also subscribe and hit the bell so you're notified. On top of that, also destroy the like button. Now, for this video, I want to give you guys an example, but I want to give you guys a real life example, and that's basically me. So right now, I have invested around $124,000 across 5 different brokerages just to test them out and stuff like that. But in reality, that's around 124K invested at around a 24% average gain. And that makes me somewhere around $298 in dividends every single month, which is pretty cool, right? But what would happen if my portfolio went down by around 50% and it goes down crashing all the way? Do I buy more? Do I hold? Or for example, do I panic and go ahead and sell and maybe save some money on the taxes? Okay, what exactly are you supposed to do? And by the way, if you want to know all the 5 places I invest, is basically in Acorns I have around 33K, in Robinhood around 14K, Cash App 3K, Sofi Money 22K, and also M1 Finance around 50K. Why? Because usually I'm testing them out and letting you guys know exactly how I invest, how the platform works, and all that stuff. But in reality, right now, my main broker is basically M1 Finance, and link down below to my portfolio and what exactly I actually invest into. But overall, guys, the idea is this: when it comes to investing, and if my portfolio were to crash right now, all the way, well, the answer is, before that even happens, you have to have a setup when it comes to your investing and the way you actually invest your money. And the answer is, you're going to need 2 things. The first thing is an emergency account for 6 months. That way, by the way, people don't remember this, but usually when the market drops, like by a lot, sometimes that might result maybe in you even losing your jobs. You want to make sure you're not panicked into and trapped into saying, hey, I don't have a job, I'm going to have to go ahead and sell all of my investments to actually live, eat, and actually pay for rent. The answer is, make sure you have an emergency account with around 6 months worth of expenses, so when that does happen, if it does happen, you're good to go and you don't have to panic. Now, on top of that, the way I invest is this, guys, okay? I do something called dollar cost average, meaning that I buy the average of the stock market every single year by investing the same amount of money every single month, or for example, weekly. And the idea is, if I buy every single week the same amount of money in the same portfolio, I'm going to buy at the highs, also at the lows, but by the end of the year, I'm going to have the average. So the best thing you can do right now is, 1, make an emergency account. That way you're safe. Number 2 is do dollar cost average. Invest the same amount of money every single week or every single month, and that way you buy high and low and you're not worried about, hey, the market just dropped. But here is a real life example, okay, guys? Last year in 2019, I was investing every single month around $500. Again, dollar cost average, the same amount of money into the same portfolio on the same time every single month. You can do it weekly if you actually want to, whenever you actually get paid. Now, when 2020 rolled around, guess what happened? The whole pandemic happened, and in March, my portfolio dropped by around between 10 to almost 20%, okay? And the answer is, Tommy, what did you do then, okay? Did you sell? Did you buy? Or for example, did you hold? The answer is, I held on to my investments, yes, but I went ahead and I invested and bought even more of those same investments for a discount. That's the entire goal when the market actually drops. And by the way, I continued to invest in $500, but I also added even more and more money to it. And that way, when the market recovered, right now I'm up around 24%, while some people that sold missed out on all the gains. So the overall idea is this, guys, okay? In time, the market is going to crash. You can't predict when it's going to happen. And by the way, I want to show you guys something right here very quickly, okay? This right here is the S&P 500, right? And so far, we're around 3,406 points today. This is in 2020, by the way, and right now we are in October 6th. Now, the idea is that what do you think the market is going to do long term? Like in 10 to 20 years, do you think it's going to get more expensive or less expensive to start investing? The answer is most likely it's going to get more expensive. Now, don't take my word for it. Just look at the S&P 500. In the 1980s, it was around 130 points. And then maybe, for example, 20 years later, in the 2000s, that's 1,300 points. It went up. And then although it crashed because of the whole bubble with the whole internet boom and stuff like that, well, guess what? It also, again, recovered. And then although it crashed because of the housing crash back in 2008, the answer is, guess what happened? In 2-3 years, again, it also recovered. And over time, the entire pattern here is that the market keeps going up and up and up. But the most important thing is this, guys, okay? You can't predict when the market is going to go up or when it's going to crash. But every single person that's basically just kind of like investing for fun, the answer is they get very excited when the market is up, but they get panicky when the market goes down. But you, as a good investor, the idea is that you know for a fact the market is going to crash. The point is, keep investing the same amount of money. That way you get the average over time, dollar cost average, and you also have an emergency account. That way you're also safe. But on top of that, when the market crashes and everyone is scared, by the way, Warren Buffett says, okay, when everyone is fearful, that's when you want to go ahead and take action. So when that does happen, and it will happen, you go ahead and you invest more money and buy at a discount. Because why wouldn't you want to pay half price or 30% less for the same investments that you paid for last week or last month for full price? Okay, so the point is, over time, we know the market is going to go up. So the point is, buy in at the average, and then when it goes down, buy in even more. And that's the whole goal. And by the way, some of you are going to ask me, Tommy, but what about borrowing money to then go ahead and invest? For example, having a margin. Now, the answer is, say for example, you're borrowing money during good times, okay? The market goes up, you keep making money on your margins, the money you actually borrowed goes up, goes up, goes up. But then what happens, for example, when the market crashes and now they call in your margins and you have to pay all that money back? The answer is that's going to add an extra layer of stress. So usually I never recommend, and I myself don't do this, I don't borrow money to invest. I do the average over the year, $500 or maybe $1,000 or maybe $4,500 every single month. But the answer is I get the average, okay? Every single year. When it crashes, I go ahead and I basically invest more and buy more. That is what I do. And by the way, if you want to know exactly what I invest into, I'll put a link down below. But the answer is that currently, I basically just invest into a mix of ETFs that track index funds. So the idea is that I'm not trying to buy Tesla or buy Apple or buy whatever companies there's out there, because basically, I don't know if after the crash they'll be around, but I do know the entire stock market is still going to be around and still going up in the next 10 to 20 years. So the answer to your question is, when it comes to the presidential election, when it comes to, hey, there's a pandemic, when it comes to, hey, we're having a depression, the answer is, over time, the market has shown that over time, the prices keep going up and up and up. So what you want to do is buy the average and buy when it's low and buy a lot of it. That's the entire goal when it comes to investing. And by the way, guys, lastly, before I go here, here's a very morbid thought, but it is realistic and you do need to know it, because basically you are investing your own money and I want you to know the risk, right? So say for example, the market crashed and it stayed down there forever. Like, it just crashed, just tumble, the stock market is over. Well, in reality, that means that American business is basically over also, forever. So in that case, you might say like, well, I'd rather have cash. Well, in reality, the currency, which is the American currency, won't even matter anymore. So the point is, you're better off investing into the American market, and you're better off saying, hey, what if it crashes forever? In reality, that won't happen. And if it does happen and America is over, then at that point, it doesn't matter. And by the way, a great book on investing is The Intelligent Investor by Benjamin Graham, and also The Little Book About Common Sense Investing by John C. Bogle. And those two books right there are my favorite books when it comes to investing. If you want to invest the way I invest, read this book and click the link in the description to my portfolio. But if you want to pick stocks, then read this book right here by Benjamin Graham. I'll see you guys later. Thanks for watching. Also, comment down below right now. Let me know, who do you invest with, and how much money are you going to invest every single week or every single month? And also, what are you going to do when the stock market crashes? Buy more, sell, or panic? Comment down below, let me know. I'll see you guys later. For the next video right here, well, like this video on top of. Also, if you're new here, subscribe and hit the bell so you get notified. And before I go, if you want to text me or talk to me, so there's my Patreon, link down below, or send me a DM on Instagram at TommyBryson. And if you want to watch a detailed video on my portfolio and my dividends, watch this video right here. And see you tomorrow. Thanks for watching, and as always, peace.